Wednesday, July 24th, 2:48 p.m. New York time. Welcome to Winning Wall Street's Money. If you'd like to subscribe to his YouTube channel, get notification when the video is available. If you don't know, I'll tell you. You click subscribe, you click the bell, and you'll get a notification when this video is posted along with future ones. It's free. If you want to get access to the video the same day I post it, well, that's exclusively available for my subscribers on my Patreon page. My Patreon page has different levels. So if you want to get the basic to see it the same day, that's on level 1, 16 cents a day. Access to the same day the videos are posted, instead of waiting days, weeks later on YouTube. Access to the economic news and maybe bonuses time to time. Well, I'm going to go a little bit deeper in this video and show you stock earnings with options. So you can use either the underlying stock or the options. And those I put on my watch lists that are available on this level and above. If you want to get notifications on trades I'm taking in and out, that's a level 3. Again, the link is below in the video. And if you want to make a one-time donation, you're welcome to do that too. I have a PayPal and Venmo link below because you'll get good insight out of this video. So the underlying we're going to talk about is the equity that has earnings coming soon. Stock symbol is Whiskey Yankee November. Earnings are next month, Wednesday, August 7th, after the market closes. But there's strategies to take trades now, leading up to the earnings, and to be out of it before the earnings. This is a resort and casino company, Wynn Resorts. Briefly, I'll show you the charts. Then we'll go to the options and show you some stuff here. This is a 5-year chart, self-explanatory. Tells you the name, the stock symbol. I have it all in here. Here's a high this year. Here's the high of last year. So we're below the high of last year, below the high of 2020. Look at this. This is a gap. Has not got filled yet on the downside. And here it's the low of 2023, last year. We broke it today. My alerts went off. A long time ago, I set those alerts. Yep, last year I set those. They finally went off, broke below it. Maybe we'll go down here and fill this gap. Time will tell. Looking at the daily chart, 1 year. Show you some stuff here. All this was the end of last year. That was the beginning of the low of last year. We came back to retest it. We never did 100% retest. So that would be buyers that stepped down here. They ran it up. That was the early high this year. Sold off, went back up, made a higher high this year, failed to continue going up. And then that decline rest of the year. So a sweet spot, potential trade idea down here. That's why I had my alert go off. I'm not sitting here 24/7 watching the chart. Nope. Set the alert. If it goes off sometime, I read the alerts. I put notes. Again, this is the daily candle. So I know situations coming up that the earnings that man I just mentioned are here. Yeah. No news since the 19th. So we know the stock's declining. It broke the low of last year, but there's no news. But we know earnings are coming out. Let's go to the option chain. So strategy I apply for trading options, I look at the underlying, level 1. I give you much more detail on level 1. The main part is the bid and the ask. 80.75. It's moving fast right now. But again, I like to have tight spreads to meet my requirements before I take a trade. Wide spreads, I pass. I want to have good volume or I pass on it. Yeah. So the underlining is here, and that's the price of the underlining. $80.79. Bid and ask. It's kind of wide, wider than I like. But again, that could change different times of day. Then I go to the underlining. So since we have earnings coming soon of next month, I want to be a little bit closer. And the nearest contract for that is 9 August because earnings are the 7th. That would be after that contract. But I want to include that contract because there's trades up to that. Yep. Trades up to that. Typically a few weeks before earnings, momentum starts. Short-term trades can be made. So the underlining, 80.78 for Wynn. Looking here on the call options. Don't be concerned about the calls and puts right now. Just to show you something, what's going on here. This is today's volume. Just today on those contracts that expire there. 2 August. Look, the largest volume, 225 on the 81 strikes. On the calls. On the put side, here, the largest volume, 62 for the 80. So the 81 on the call, the 82 on the put. So we know right around that underlying price, there's a lot of activity on the options. So back on the call side, bid the ask, look at the spread. 56, 62, 156, 162, that's wide. Let's go to the put side. On the 80 strike, 118, 128. That's wide. It could be different tomorrow or closer earnings when there's more activity. Let's go further out to the 9 August. Because remember, this contract will still be open when the options are in expiration, the earnings coming. This one will be already expired. It's going down here on the volume. The highest volume today, 314 on the calls. And what strike? 83. Big difference than the other one. Where here, the big volume was 225, 314. More volume, more contracts were traded today on this further out one. And on the higher strike, let's go to the puts. Volume today, the biggest was 58 on the 80. Remember, it was also here on the 2 August, the 80 put. 62. And the 9 August, 80 put, 58. So again, both strikes on the puts have a lot of activity, but less on the further out. And the bias is certainly on the call. There's more activity on the call. Next, back here on 2 August. Since this contract was created days, weeks, months ago, open interest is only 100 positions open, but today 225. So there are more contracts traded today than current opening. So tomorrow this would be higher. This goes up put side, 62. There's already a high interest, 109. So again, there's already been higher open positions there. So this is where the divergency is. Open positions. Well, we outtook that today, over doubled it, 225. Yeah, a lot of activity. Got it. Let's go down here further. We said the high of the volume was the, nope, it was here, the 83. So the 83 contract volume. Look at that. There is already high volume here, which happened to be the highest of the open interest. Highest open interest was the same strike. 83 versus has the highest volume today. So I don't see much of a divergency compared to here. Again, it is on the call side, much more activity. Go to the put here. And then we'll go to the final section. 80 put, open interest 83, today's volume 58. So tomorrow this would be higher because this would be added on it. Or unless they're closing the positions, then it'd be negative. We won't know till tomorrow after the close. Yep. So again, overall, the bias is more activity on the call side, and we see a divergency. Going down here on the biggest trades today. Notice this. First one, 11:21 a.m. New York time, the 9 August. Remember, I told you that's the one that's open when the earnings come. 9 August, 81 calls. Strike 81 calls. Someone did a trade for 99 contracts. One individual did 99 contracts for 81 calls. Just back up here. The 81 call. Right there. So we know the 83 had more activity, but still a huge trade right there. One person, again, the overall trade today, volume, 206 contracts, but one person did 99. Around 11:21 a.m. this morning. And look, premium was $335 for the call. So bid and ask, either they closed the position they already had, existing position, because again, 81 call. But not likely because the open interest is 14. So there's not even 99 contracts available. So that means likely they didn't close a position. They open a position. It's going to be higher again tomorrow. So back here, when I see 335 premium, the bid and ask, think about it. If you're bullish, they would have bought the calls on the ask. If they're bearish, naked calls, bear call spreads, but most likely naked calls, maybe bear call spreads. They collected premium 335. They are not anticipating the stock to go higher. They're anticipating the stock to stay below 81, which it is right now. Yeah, that's maybe not easy to understand right now. I explain that detail, a lot of examples, a lot of trade ideas. So that's just part of it. Just part of the insight. And here are the puts. Going further, again, I have them queued in for higher amounts. But if you like this content, at the beginning, baby steps, instead of paying your $30,000, $50,000, or $100,000 or higher for a college degree, specifically in finance, economics, or double major, and then graduate, have that high debt to repay. Well, for a smaller amount, monthly fees, you can start learning a skill right off the bat. You don't have to wait for 3, 4, 8, 6 years for that degree. Yeah. Get skin in the game. The insight from my Patreon page. That's it for the video. Thank you as always for spending just a little bit of time with me. Thanks for watching.